Welcome to Math and Markets, using a collection of W.D. Gann's most prolific astro trading techniques. I'm Marie, and every week I will be posting my personal analysis and forecasts of EURUSD and possibly other future contracts. These will be usually done prior to market open for the coming week on Sunday afternoons. I've been trading this Forex pair for 6 years and have been studying Gann's methodologies for the same period. As a reminder, this video is for educational purposes only. The golden ratio method is not financial, investment, or trading advice, and any and all presenters are not licensed financial advisors or broker-dealers. Trading involves substantial risk of loss and is not suitable for everyone. Past performance and any examples shown are illustrative only and do not guarantee future results. Always consult a licensed professional before making financial decisions. Enjoy the video and make sure to stay until the end for your math formula assignment. Be sure to like and subscribe for more content like this. Let's begin. And it is 3:15 p.m. Central Standard Time. So markets will be opening soon. I just want to do this prior to the market so that I can, ensure that it is truly in the nature of a forecast based on what I have analyzed in terms of the methods and techniques that I use. I want you to be sure to stay till the end of the video. I'm going to share with you a simple squaring math technique that you can use this week, no matter what your trading strategy is or what equity or Forex pair you're trading. Okay, it works. It's math. It's not magic. So let's get started. We are looking at the 4-hour chart. I always like to look at the larger time frames to see the trends and what's happening with where we are. And on this 4-hour chart, if I just scale it down a little bit, you can see the overall trend is down from this high here back in, let's see, April of 2026. We are still in a downward trajectory. We had a big slide down here, and now we are in what it looks like to me to be a little bit of a consolidation for this. And it, I could be wrong about that, but this looks to me like it's in okay, that didn't come out right. This is live, y'all. Okay, so I'm like not gonna be trying to make make corrections. Anyway, using my arrow here, just this area seems like it's a little bit of a consolidation, kind of like up here. Let me see if I can fix my box because I like using my boxes. So let's see. I think I did something with the shading. I did. There we go. Let's pull that shading out. Let's do this. And that'll work. Okay, so here we have some consolidation here, and then it broke down, retraced back up, and did a serious drop here. This gave me a double bottom. And just FYI, one of the things that I really look for in my trading is double bottoms or double tops. Generally, that's a reversal signal for me. And as you can see, it stayed true to form in this scenario. So here we are. We're probably have a little bit of consolidation here. And let's mark that right there. And it broke out. Not much, and kind of just, we're still here. I would say that's just a full consolidation thing. There's no breakouts yet. However, this is just a 4-hour chart. Okay, so this is where we stand. It's still a downtrend. We have a lower high and another lower high here. It's down on the hourly chart where I get to the nitty-gritty of what I think is going to happen here. If you notice on my chart, I have these turquoise lines, that indicate degrees. Now, I do what is considered by Gann astro trading. So I use planets and I use angles to determine what my trading strategy will be for that particular day. As you can see, the high here, where this vertical line is now, reached the 360-degree level at 1324, or off of a 1324 low. And so that's pretty significant. Probably is going to be a significant support or resistance level. As you can see in this little area right here, it is in fact a resistance level right here. That's kind of big, so let's make that a little smaller. Okay. So yeah, right here, it is resisted. It resisted a couple of times. Let's blow it up a little bit and see what happened here. Price bounced off of that 360 and went straight down. Now, it was when it bounced off of the 360 exactly that it reversed with this hard push down. So here is a nugget for you. If you have followed some of the techniques that I have done using math, you'll know that whenever a price hits exactly the degree line, it is going to give a hard rejection to the downside or upside, depending on whatever direction you're trading in. So just keep that as a feather in your cap, and make a note for future videos. I'll be going more in depth on those types of strategies. But right now, let's continue. Okay, so here we are. We have a down candle on Friday at noon. The noon 4-hour candle gave us this downward trend. The thing that I'm going to show you in a few seconds is what I noticed about this is that I have another double bottom here. And it's barely noticeable on this chart. But if you look at this candle, the low was 14.11.6. I usually drop the last digit and just say 14.11. So this is also 14.11, but it's 14.11.8. So it's not quite exact, but because it is 14.11, I am going to say that that's a double bottom as well. So I'm going to copy my double bottom indicator here and move it up to 14.11 and just have it as a marking point. So let's see. And we're going to go to just 14.11. Okay. So there's my double bottom. So I'm going to say on my forecast, based on what I see right now, that we might continue down a little bit, break below that double bottom and reverse, or the next candle is going to come in higher than the close of the previous candle. And if that's the case, I would take a long at this point right here. So we'll come back. We'll do this on a smaller time frame so I can be sure that my assessment is accurate in my estimation. Okay, so let's go to the 1-hour chart. I'm going to save this. And I'm going to go to the 1-hour chart and see what I'm looking at. Now, you're going to see some things. There you go. You're going to see some lines, some boxes with calculations in it. I've got areas that I need to watch carefully. There's a crossing here, right about here on the 16th at 11 at night, 11 p.m. Central Standard Time. Actually, yeah, I've got that correct. That's actually Eastern Standard Time. So 11 o'clock, something is going to happen here. Don't know what. There's going to be some movement in the market. We'll figure that out in a few minutes. Right now, I just want to go to the current pricing action that's happening. So Another nugget. I see a W formation coming. Maybe wrong, but if it does reverse at this point, because if you look closely, again, I have a target here, 90 degrees at 1411. That's where we just talked about on the 4-hour chart. So my target is 1411. And even though it's just a few pips off, I still think that it's going to go into the long direction. It's close enough because this first touch point actually did hit 1411.7, which is a millisecond fraction. It was at 1411.8 on the other chart, remember? And so it's 1411.7 now. I would say that's an exact hit, exact bounce. It came and tested that level again. So let me make this a little bit bigger so you can see this little area right here, right? Look, see, it hasn't actually touched my target, which I am waiting for, because that's the true square out for the calculation that I did. But this is close enough for me to say maybe there could be another candle that will bounce exactly off of my target. If it does not, and it breaks below my target, then I can expect that the W formation that I was expecting will not continue, that it will actually move down to this other target that I have calculated down here. And obviously in the markets, there's no straight line. It always does its jig-jag, jigsaw, jig-jag, or whatever you want to call it, zigzag, before it reaches its final destination. So that's to be expected. But I do have this calculation here for 1431 and 1356 based on a 1431 calculation. As you watch my videos, you'll know that I move back and forth a lot. I hope you can keep up. I try to stay in order of what my thought processes are. But pardon me if it does confuse you. Leave a comment if you must, and I will do my best to clarify some of the things that I explain here. Anyway, back to the chart. Here's my W, right? If it is going to go into my W pattern, it is going to go towards my 1468 target. That's 180 degrees. That's confluent because there's a blue dashed line here. This blue dashed line represents a node. As I said before, you may not know what the heck I'm talking about when I talk about nodes, calculations, etc., etc. I will get into it. This is just the first video on this channel, and I'm going to be getting into some of the elements of what I use as in regards to the math so that you can understand it more accurately. I'm going to guess that you have some indication of Gann's work and you know a little bit of what I'm talking about. So as I continue here, if it reverses, it looks like it's going to head towards my 1468 target. And my 1468 target is also confluenced by a node, which is this blue dashed line. So that's two very strong indicators that it could go in the direction that I wanted to. Let's see. So we'll check that out. We'll see. That's my projection over the next a couple of days. It may take a couple of days to even get there. But like I said, if it decides for some reason that it's going to break at this level here and continue to the downside, there is a target down there waiting for it. Now, I use a couple of indicators through TradingView. One is one that I developed myself called the Golden Ratio Method Planetary Timing. That one I'm not going to use right now because we're not using, I'm not using that for this example. When I do, I will show you. Right now, I just want to use Luxalgo's Smart Money Concepts one to show you where the demand is and the supply is. So here we have a demand area, a supply area here. Strong sell, probably not going to make it directly to the target, probably going to go here, which is closer to this point right here. So this is a pretty strong resistance area right here. Let me put it, where is it? Where are you, triangle? There you are, rectangle. Pretty strong. Let's do this. And if I pull it back, I see again, yes, there was some consolidation there in that area. So I can expect one or two things to play out. If it reverses, it will go up to here, at least as a resistance. If it decides to break through that resistance, it might go to the bottom of this demand area, supply area. I keep saying demand, but you know what I mean, the sell. Okay, so if it breaks through to at least 50%, I can expect that it will break through to a new high, which will give me my target here. All right, so let's call that 3 different scenarios, right? The first scenario, scenario 1, is that price will break through this 360-degree level that I have here, and also my target, hit my target precisely, or break through my target. And if it breaks through my target, then I expect it to continue down to the 1356 target. All right. If that's scenario 1. Number 2, if it decides that it is going to shuffle around here a little bit until it does exactly touch my 1449, my 1411 target, if it hits it precisely, exactly, it will do a hard reversal to the upside and go towards my 1468 level. That is 180 degrees from the low that I calculated down over here. Okay, so we have a couple of scenarios that 3 scenarios that are going to play out. So 1, break, go down to first target. 2, bounce off target, go to the 180-degree target. Or this strong area here of resistance is going to prevent it from going all the way to the top, and it'll probably stop here, pull back. If I can, let me do this. I'm gonna get another arrow, directional arrow. Where are you? It's probably gonna stop there, pull back a little bit, and then continue. Oh shoot. And then continue up. Okay. So yeah, let's do that. So this is what I'm looking at. So I'm going to pull that up there and say that's it. 1, 2, 3, 1 scenario, 2 scenario, 3 scenarios for this projection for the next couple of days. So for the rest of the week, though, I want you to do some math on your own. So here's the example that I want to share with you. And before I do that, you'll see in the next slide, there's going to be, well, this is live on my chart, but I'm going to do a slide where I'm going to show you how the math is performed on a blank chart. Okay. So again, it doesn't matter what instrument you're trading. It doesn't matter what time frame you're trading. It doesn't matter what time of day you trade. It just doesn't matter. I'm just going to give you the formula. You use it, and you tell me in the comments how it worked out for you. Okay, so let's get into that math. I wanted to do a follow-up real quick. After I watched that second candle come in, I redid some calculations. So it looks like from this higher high, I did a square, not on the range, but I did a square on the higher high. And I came up with this 1384 target. And that's 180 degrees away from the higher high. So I've got this marked. It's pretty close to this week low. This is a little bit of liquidity that's being formed, but I don't think that it's going to continue to go up as this candle indicates, obviously. It may or may not, but I'm expecting it to hit one of these targets here, either this one or this one. Okay, one of these two targets is going to be hit. Maybe both will be hit, but nonetheless, we've got a gap still that hasn't been filled that is required to be filled. So it's interesting. This is at 1411. The low on this candle is 1411. So that's interesting because this 90 degree target at 1411 signifies to me, a 90 degree signifies to me a reversal. So however far down it comes, it's going to come back up to this target and reverse. It may hit this target, reverse, come back up here, give us close that gap and give us a lower high, and then proceed to hit the second target, or it's going to bypass, meaning that the price action is going to not hit the target exactly, but maybe bypass the target, hit this one, and bounce back up to hit this and give us another lower high. We'll have to see how this plays out. I'm interested to know what your thoughts are on it and what your assumptions about how the market's going to move in the next 24 hours. Okay, so yeah, this was just a quick follow-up because I did pre-open analysis, and we saw that there was quite a change in my original projection, and just wanted to update you on what I think now is the true trajectory with market open. Okay, talk to you on the next video. Before we get into your math assignment, be sure to subscribe to our Math and Market Substack. Also, if you're looking to get in-depth training on W.D. Gann's astro techniques that yielded him a 92% success rate, you can pre-enroll in the Golden Ratio Method course. Check out the website for more info. Here we come to the math part of the video. And this is math that you can use in your own trading, regardless of what instrument you trade and regardless of what time frames you trade. But there's a couple of things in this blue box that I want you to make a note of now for future reference. We will be using what is called factors to determine distance from a price point. Those factors are 0.25, which equals 45 degrees, 0.50, which equals 90 degrees, 1 equals 180 degrees, and 2 equals 360 degrees. Now, we are not using that in this formula, but I just need you to make note of these for future reference, because I will be talking about these in later videos. Also, there's foundational teachings, and these are teachings that I use in my analysis. Elliott waves, if you are familiar with the Elliott waves. If not, please familiarize yourself with them. I always use them on the weekly chart when I do my big picture analysis. Very helpful, very helpful. And periodically I'll be referencing that as I do deeper analysis on the weekly charts. Candle patterns. One of the favorites I have is double tops and bottoms. These are clear reversal indicators for me. If you don't know how to identify them, I will be explaining some of that if I come across one in my videos. And of course, Fibonacci levels. Fibonacci levels are the bedrock of trading, and it definitely gives you levels of price action and what it's doing and going to be doing. So if you're familiar with Fibonacci levels, great. If you use the tool, great. Then it'll be much easier for you going forward. Right now, let's do a quick math problem. A math to solve for a problem. We've got a range of this low to this high. This range is equal to 149.1. Took 35 bars to get there. And on the 4-hour chart, that's 7 days and 20 hours, as you can see. We will be using the range number, though. The price movement of 149.1 pips is what we'll be using in our calculation. And here you will see the calculation. So we will see 149.1. All right, pull your calculator out. Make sure you're using a scientific calculator. 149.1. My voice seems to be wanting to disappear. We're going to square that number. We come up with 12.21. Okay, we're going to add that number to our high. All right, 14,730. Or you could just drop the 0 and just do 1473. I kind of like that. And then we get 1485.2 or 0.21. That's our target. So we're going to mark it on our chart as our target based on the range here. As you can see, price action currently just now, I think the market is open just now, yeah, broke, or it gapped at open. And I'll do another analysis later on that gap. But right now, you can do this math on any trade, find your targets, any swing. You could do a swing high to swing low, or just continue to do swing lows to swing highs. If you're going to do a swing high to a swing low, and you want to know what the next low is going to be, you would subtract that number, this number that we calculated here, as the square of this. Whatever the square result is, that number would be subtracted from the high, or I'm sorry, the low. It would be subtracted from the low to get a new lower low. Okay, so that's it for today, and I hope you enjoyed this video. If you have any problems or situations in your trading that you find challenging with using the formula, make sure you leave a comment below. I'll try to answer it as quickly and promptly as I can. Until next Sunday, I will wait to hear and read wait to read what you have experienced this week using this formula. Okay, everyone, take care. Thanks.